What's up, Electro Drive News fam? Get ready to rev your engines because the news cycle is absolutely electric today, and we've got the inside track on the moves that are shaping the future. The pace is relentless, the innovation is nonstop, and if you're not plugged in, you're missing out. We're diving deep into the stories that matter, the ones that are pushing boundaries and redefining what's possible. From groundbreaking financial reports to strategic investments that are set to shake up the market, we've got it all. Don't blink, because you won't want to miss a single second of these unmissable updates. First up, we're breaking down the latest financial performance from a major player in the EV space, revealing how they're navigating the market and what it means for their ambitious goals. Then, we're getting a first-hand look at how key strategic decisions are being made, impacting everything from product development to market expansion. We'll also be dissecting a significant investment that could reshape the competitive landscape, sending ripples across the industry. And finally, we're uncovering the latest on product launches that are generating serious buzz and could be game changers. Stick around because this is Electro Drive News, and we're bringing you the future today. Make sure you hit that like button, subscribe, and ring that notification bell so you never miss an update. Financials take center stage. Nio Inc. is showing signs of tightening its belt and steering towards profitability, reporting a narrowed net loss in its second quarter. This significant financial maneuver comes as the company actively works on controlling its expenses, a critical step as it eyes its first profitable quarter in the fourth quarter. The latest unaudited financial results reveal a net loss of RMB 4.99 billion, $697 million for the second quarter, marking the smallest deficit since the final quarter of 2023. This represents a 1% decrease compared to the same period in 2024 and a substantial 26% reduction from the first quarter of 2025. Market analysts are taking note, with Xavier Wang from eToro highlighting that Nio's cost control measures are clearly bearing fruit, evidenced by a one-third reduction in adjusted operating losses. Delving deeper into the financials, research and development expenses for the second quarter stood at RMB 3.01 billion, down 6.6% year-over-year and 5.5% quarter-over-quarter. The company attributes this decline to optimized design and development processes for new products and technologies, alongside reduced depreciation and amortization expenses. Selling, general, and administrative expenses also saw a sequential decrease of 9.9%, totaling RMB 3.96 billion, although they were up 5.5% compared to the second quarter of 2024. These cost-saving strategies are strategically positioning Nio to further diminish its losses in the third quarter, paving a clearer path toward achieving profitability by year-end. Nio's leadership has consistently emphasized this goal throughout the year. CEO William Li recently communicated to employees that while achieving profitability in the current quarter remains challenging, it is indeed attainable. He also pointed out a crucial factor influencing customer decisions. Approximately 30–40% of potential buyers hesitate due to concerns about Nio's financial stability. If we achieve profitability, these rumors will be dispelled. User confidence will strengthen, and many issues will resolve themselves, Li stated, underscoring the psychological impact of financial health on brand perception and sales. On the delivery front, Nio delivered 72,056 vehicles in the second quarter, meeting its guidance range. This figure signifies a robust 25.59% year-on-year growth and an impressive 71.18% increase from the first quarter. These deliveries translated into RMB 19.01 billion in second quarter revenue, a 9% year-on-year increase and a 57.9% jump from the first quarter. Vehicle sales revenue specifically reached RMB 16.14 billion, up 2.9% year-on-year and 62.3% sequentially. This growth was driven by higher delivery volumes, though partially offset by a lower average selling price due to shifts in product mix. The company's gross margin edged up to 10%, an improvement from 9.7% in Q2 2024 and 7.6% in Q1 2025. However, vehicle margin saw a slight dip to 10.3% from 12.2% a year prior, a move attributed by analysts to the strategic expansion into new segments with models like ONVO and Firefly. Looking ahead, Nio anticipates third-quarter deliveries between 87,000 and 91,000 units, a significant year-on-year increase of 40.7% to 47.1%. The company's financial resources as of June 30, 2025, totaled RMB 27.2 billion, which Nio states is sufficient for its operations over the next 12 months. Hold on tight, because the EV market is constantly evolving, and we're about to dive into the strategic moves being made to capture new segments of the market. Next up, we're exploring how Nio is solidifying its market position with a significant investment and the impact of its exciting new vehicle debuts. Strategic investment and new debuts. Nio Inc. has announced a series of pivotal developments aimed at strengthening its market presence and expanding its reach, including a significant additional investment in Nio China and the highly anticipated launch of its new vehicle models. The company's latest financial results for the second quarter of 2025 highlight a robust increase in vehicle deliveries, with a total of 72,056 smart electric vehicles delivered, marking a substantial 25.6% year-over-year surge. This impressive delivery performance underscores the growing market acceptance of Nio's product lineup, particularly the strong reception of the ONVO L90 and the Nio all-new EASE 8. These models have been instrumental in reinforcing Nio's sales momentum, leading the company to project total deliveries for the third quarter between 87,000 and 91,000 units, an anticipated year-on-year growth of 40.7% to 47.1%. CEO William Bin Li expressed confidence in these new models, stating that their exceptional product experience reflects Nio's deep market understanding and precise product definition capabilities. He further elaborated that these vehicles, combined with Nio's technological innovations, its strategic battery swapping and charging infrastructure, and its multi-brand approach, are poised to redefine competition within the large three-row SUV segment and accelerate the broader market's transition towards battery electric vehicles, BEVs. Complementing these product-focused advancements, Nio has also made a significant strategic investment, agreeing to inject an additional RMB 20 billion into Nio China. This move increases Nio's stake in its crucial China operations to 91.8%, signaling a strong commitment to consolidating control and driving growth within its home market. This financial infusion is expected to bolster Nio China's capabilities in research and development, manufacturing, and market expansion, further solidifying its competitive edge. The company's financial performance in Q2 2025 saw total revenues reach RMB 190087 million, approximately $2,653.5 million, a 9% increase year-over-year, and a significant 57.9% rise quarter-over-quarter. While the vehicle margin saw a slight decrease to 10.3% from 12.2% in Q2 2024, it remained stable sequentially. The company's net loss also narrowed by 1% year-over-year to RMB 49948 million, a $697.2 million. As of June 30, 2025, Nio maintained a healthy cash position of RMB 27.2 billion, $3.8 billion, providing a solid financial foundation for its ongoing operations and future investments. The company also noted that its comprehensive cost reduction and efficiency improvement initiatives are beginning to show positive results, with non-GAAP operating losses improving by over 30% sequentially, indicating a potential structural inflection point in its financials. These strategic decisions, from product innovation to major financial investments, demonstrate Nio's forward-looking approach to navigating the competitive electric vehicle landscape and securing its position as a leading player. This strategic maneuvering sets the stage for intense competition in the EV market, and we're about to unpack the latest financial reports that reveal who's leading the pack. Now, let's shift our focus to another key player in the automotive industry and their latest financial disclosures that are making waves. Mixed financials and market positioning. Nio Inc.'s second quarter 2025 financial results paint a picture of robust delivery growth coupled with a slight dip in vehicle margins, a common trade-off as the company expands its multi-brand strategy. The electric vehicle manufacturer reported delivering 72,056 vehicles, a significant 25.6% increase compared to the same period last year, and a remarkable 71.2% jump from the previous quarter. This surge in deliveries was distributed across its brand portfolio, with 47,132 premium Nio-branded vehicles, 17,081 from the family-oriented ONVO brand, and 7,843 from the Firefly brand contributing to the total. Total revenues for the quarter reached RMB 19.01 billion, $2.65 billion, reflecting a 9% year-over-year increase and a substantial 57.9% sequential growth. However, the revenue growth from vehicle sales, which stood at 2.9% year-over-year, lagged significantly behind the delivery growth. This disparity suggests a lower average selling price, a direct consequence of the product mix shift as Nio diversifies its offerings. On the profitability front, the vehicle margin decreased to 10.3% from 12.2% in the second quarter of 2024. This decline, while notable, was offset by a stable sequential margin and an improvement in the overall gross margin to 10% from 9.7% year-over-year, and a more significant rise from 7.6% in the first quarter. The improvement in gross margin was partly attributed to increased revenues from services such as used car sales and technical R&D services. Cost reduction initiatives are yielding positive results, with operating losses decreasing by 5.8% year-over-year to RMB 491 billion, $685.2 million, and by 23.5% sequentially. Furthermore, non-GAAP operating losses, which exclude certain non-recurring or non-cash items, showed even more pronounced improvement, dropping 14% year-over-year and 32.1% sequentially. This indicates that the company's core operational efficiency is improving. Nio's balance sheet remains solid, with RMB 27.2 billion, $3.8 billion, in cash and equivalents as of June 30, 2025, providing a crucial financial cushion. The company's outlook for the third quarter is optimistic, with projected deliveries ranging from 87,000 to 91,000 vehicles, representing a strong year-over-year growth of 40.7% to 47.1%. This positive outlook is buoyed by the encouraging market reception of newly launched models like the ONVO L90 and the redesigned Nio ES8. Additionally, Nio is reinforcing its strategic control over its China operations by investing an additional RMB 20 billion, increasing its stake in Nio China to 91.8%. This move is expected to streamline operations and accelerate growth in its primary market. Despite the challenges of margin compression due to product mix, Nio's substantial delivery growth and improving operational efficiencies signal a company strategically positioning itself for long-term success in the competitive EV market. These financial reports are crucial for understanding market dynamics, and we're about to break down another significant earnings call that could shift investor sentiment. Next, we're turning our attention to a major announcement regarding a significant investment that could reshape the competitive landscape of a key industry sector. Investment fuels expansion and innovation. Nio Inc. is making significant strategic moves to bolster its market position and drive future growth, highlighted by a substantial RMB 20 billion investment in Nio China, which increases its stake to 91.8%. This capital injection is set to fuel further development in manufacturing capabilities, expand its sales network, and accelerate the rollout of its innovative technologies across its growing brand portfolio, which includes Nio, ONVO, and Firefly. The company's recent Q2 2025 financial results showcase a strong upward trajectory in vehicle deliveries, with a total of 72,056 units delivered, representing a robust 25.6% year-over-year increase and an impressive 71.2% surge from the previous quarter. This growth is attributed to the positive market reception of its latest models, including the ONVO L90 SUV and the recently debuted Nio all-new ES8. These vehicles are not only driving sales momentum, but are also critically acclaimed for their advanced features and user experience, positioning Nio to compete effectively in key market segments. Total revenues for the quarter climbed to RMB 1900.87 million, US $2,653.5 million, marking a 9% year-over-year growth and a significant 57.9% increase from the first quarter. While the vehicle margin saw a slight decrease to 10.3% compared to 12.2% in Q2 2024, the company's focus on expanding its product range and market reach, particularly with the introduction of the ONVO and Firefly brands, is a strategic imperative. This shift in product mix, while impacting margins in the short term, is crucial for capturing a broader customer base. The company's net loss for the quarter narrowed by 1% year-over-year to RMB 49948 million, US $697.2 million, indicating progress in its cost management efforts. Furthermore, Nio's financial health remains solid, with RMB 27.2 billion, US $3.8 billion, in cash and equivalents as of June 30, 2025, providing ample runway for its ambitious expansion plans. The company's leadership expressed optimism for the third quarter, projecting deliveries between 87,000 and 91,000 units, a significant year-on-year increase of 40.7% to 47.1%. This projection is supported by the strong consumer interest in its new offerings and the strategic investments being made. The significant investment in Nio China underscores the company's commitment to its core market and its strategy to leverage integrated operations for greater efficiency and market responsiveness. By consolidating its stake, Nio aims to streamline decision-making, enhance technological integration, and accelerate the development and deployment of its next-generation electric vehicles and services. This combination of product innovation, strategic financial backing, and market expansion positions Nio to further solidify its standing in the global electric vehicle industry. These strategic investments are key indicators of market direction, and we're about to get a comprehensive look at the latest quarterly earnings that are setting the pace. Now, let's turn our attention to the latest financial disclosures from a major player, revealing their performance and outlook. And that's a wrap on today's electrifying news. We saw Nio narrow its losses while boosting deliveries, signaling a potential path to profitability. Nio's strategic investment in its China operations and the strong reception of its new models like the ONVO L90 and all-new ES8 are setting the stage for future growth. The company's financial results show a mixed but improving picture, with a focus on expanding its market reach. Don't forget to smash that like button, subscribe to ElectroDrive News for all your essential updates, ring that notification bell so you're always in the loop, and drop a comment below with your thoughts. Follow us on all social platforms to stay connected. We'll catch you in the next one.